CNBC TV18, celebrating 15 years of leadership.
Hello, welcome to Budget 98. I'm Simple Chengalvarayan.
Okay, come. Green is picking up. An all-time high. Welcome to Markets Today. As you saw in the montage, it was a big day in the CNBC TV18 newsroom as well as in the studios. For the markets itself, it was the third day running that they ended lower. So looks like this time the correction is there for sure. Hi, Anuj.
Hi, Lara. Indeed, we had a grand day. No grand day for the market, but, the market had become used to bigger days. But today was really, start of something. That's something that, a lot of people are asking, that was today start of something bigger in terms of correction. That's something that we'll have to see.
All right, Anuj, let's fire off the top headlines and we will come to you for more analysis.
Indeed. Well, shares fall across the spectrum. Big caps, mid caps and small ones dragged by Asian markets, oil stocks and poor Japanese GDP data and lower Chinese trade numbers.
Indian shares fell more than most markets thanks to Infosys. Promoters sold 3.3 crore of their shares. TCS, HCL Tech and the tech indexes fell in sympathy. ITC, Coal India and ONGC outperformed.
And dalal still veterans who gathered to celebrate CNBC TV18's 15th birthday remain bullish. Atul Suri sees the Nifty at 10,500 by mid-2015. Samir Arora says crude is a huge positive for India, but Nimesh Company cautioned that the market may have over-discounted the positives.
Well, and as we celebrate our 15th birthday, we have a power-packed lineup of guests today. Big voices from the market: Atul Suri, Samir Arora, Ramesh Damani, Nimesh Company, Ashok Wadhwa, Jim O'Neill. These are some of the veterans who have seen the ups and downs in the market for years and have also been a part of the CNBC TV18 journey. Well, for starters, let us tell you what happened in the markets. Anuj, you were telling us at the start that this correction today looks like it's not going to end in a hurry.
It does look like that, Lata, and the reason for that is very simple. You remember we were talking about it on Friday, that Friday was just a Friday factor. Let's see how Monday reacts. And today, there was no apparent reason for markets to see the kind of sell-off that the market did. Yes, Infosys was one factor, but for the market to close at low point of the day, second day running, and to not see any kind of buying is telling you that, you're now making money if you're selling the market intraday, which is never a good sign if you're a bull. So essentially what we are looking at now is maybe some bit of weakness. I think if tomorrow is also down, then maybe you can say that okay, this correction is now ensuing, and it would be prudent if you were to enlighten your position, lighten your position, especially in the mid-cap space, because that's the space which had run up quite a bit. And today also, till about noon, mid-cap index was actually outperforming, and then by the end it underperformed. So it's telling you that that's the space that you got to be cautious on. And IT is not helping the markets, Lata. Infosys, HCL Tech, TCS. A lot of people believe that this quarter's numbers won't be good for IT companies, in part because of currency strength, in part because of what's been happening globally. So that could be one reason. And one more point: if it wasn't for ITC for last 3 or 4 days, the market would have already broken 8,400. But for me, 8,400 remains the support point. If that's broken, you could have a bit of a slide towards 8200 zone. That's what technical analysis tells me.
All right. Well, midcaps today performed just as badly or as well as the heavyweights. There were pockets of strength that continued, like some of the pharma stocks like Aurobindo, some of the defense stocks like Pipavav. But most importantly were the NBFC stocks, which depend on wholesale money. The debt markets gained, bond prices put on weight, and the yields for the 10-year fell all the way to 7.9, 7.91, and that gave the NBFCs a reason to cheer. L&T Finance Holdings, among others, were the gainers in this market. But like we promised you, here are the biggest faces from Dalal Street telling us what they think the markets will do going ahead in the medium term and the long term. Listen in.
You may have a 2% or a 3% correction. I feel it's a buy on dip market, because I still hold the thesis that I've been saying for the last 10 months, a year, that I see the Nifty, it's again a technical view of 10,460. I've been saying this since a year, and I still think that there's a 20-22% gain, and I think that this is going to come in the next 6 to 9 months. What you've really seen is the CNX mid-cap index has broken out into lifetime highs very recently. So I feel that there's a very large catch-up, and when I do projections of targets, I think that we could see about a 40% move in the mid-cap space. What's important and for us really is what's happening with crude, and I think that it's not just going to be a case of crude which is it's going to again, it showed us a level and went back, but more importantly is where crude will stay, because if crude stays at these levels for a longer period of time, that's when I think India's balance sheet will get materially affected, and that's more important.
15% dollar terms compounded for a number of years is a dream on which we can raise billions of dollars, which will keep us all very happy. So we are only looking for what is the minimum that we can make or hope to make. It sometimes doesn't even happen like that. Although over times, even if there are dips in between, it ends up being like that over some 7, 8, 10 year period. But there is no need, it should not make anybody more bullish. They should be as bullish if they can see clearly a 15% type of move. Right now, although it is true that the government progress in terms of announcements is happening, but not really many people are seeing things on the ground. But these things invariably happen with time if all the building blocks are in place. But I think the biggest event is the decline in oil prices, which actually is independent of the government, and in some sense is as big as the government's coming to power, or BJP coming to power, or Mr. Modi coming to power. If let us say that Mr. Modi had not come to power, but the Congress was in place, but oil prices had been as low as they are today, you would still have had a maybe 20% rally in the markets till now instead of the 35%.
What we have to look out when a bull market tops out is the sense of froth. In the public, in the galleries, in the cafe, in the press, the panwala, everyone's talking about stocks, and the very poor quality names of the heaviest traded companies. So far, there's been minimal dilution of equity also. So I think we're in a good wicket. There'll be froth from time to time in individual sectors, individual stocks. They will correct and the market will move on. So I think to try and call the market top at this point, perhaps not the wisest thing, because we have to watch the market to give us a sign that it is stopping out, rather than we preempting it because the market has gone up 30% or 35%. To me, it's ridiculous that India's interest rates are so high. There will be enormous pressure on the RBI to reduce it, beginning in February. So I think it's going down. It's a smart trade. I completely agree with you. And obviously, if falling interest rates are like gravity on the stock market, it'll propel the index much higher. So you buy the interest rate sensitives, the cyclicals, to participate from that.
All right, that was the market opinion we got all through the day. But time now for all the action from the futures and options space. Varinder is here right in studio. So Varinder, what was taking place?
Well, clearly, Anuj, you have mentioned about 8400 level, why it is very important. But look at 8500 put, huge unwinding seen today on that level. And even on 8400, we are seeing constant, buying which is happening in. And that 8400 saw addition of nearly 16 lakh shares. And of course, the premium is moving higher, clearly suggesting you that now people are buying into puts. And the call writing, which was earlier happening at 8600, 8700 level, is coming down. So there is, clearly, signs of market participants believing that markets could go down from here. Two sectors actually which were responsible for the market fall today, banking and IT. Clearly, if you just see Bank Nifty, it added nearly 9% in open interest. Clearly, we saw Bank Nifty, most of the stocks were there. So SBI, Yes Bank, and many others, they were losing steam today. And Infosys, clearly the stock was down nearly 5%, and with an open interest built up of nearly 34%, 30 lakh shares added on Infosys. Clearly, fresh shorts were there, and few mid cap stocks which are running high but now which are losing steam. CESC and Arvind. CESC actually was down 5%. We saw open interest built up by nearly 15%, and Arvind, which was again down nearly 6% today, open interest going up by nearly 4% on the short side. An idea, ahead of that Feb auction where people are fearing that the company might have to pay a huge sum rather than what was expected early. The stock was down nearly 3%. Yet again, the stock has lost nearly 10% the last 3 or 4 days. Open interest was up by nearly 14%. And some of the cap good stocks like ABB Siemens, which are running up. Siemens was down today. There was unwinding which was seen over that stock, which was down nearly 4%. And had it not been for ITC, which has been holding very strong, and even today that stock was up nearly 1.8%, where the open interest was up by nearly 7%. ITC is the only stock which has gained nearly 7% in the last 3 or 4 trading sessions.
All right, that's the last bastion, ITC. As well, remember that 8,400 at the moment is the intermediate bastion. But the big bad news for the markets today was in the form of Infosys. It was the top loser in trade, closing with a cut of close to 5% after 4 founding members sold about 2.8% stake in the company. Rima Tendulkar here is with the details of this deal. Rima.
Infosys stock was under pressure today as the founders, few of them have sold 3.26 crore shares at an average price of 1,988 rupees per share to rake in a total 6,484 crore. This share sale of 3.26 crore is about 2.8% of the outstanding equity, and it was done at a 4% discount to Friday's closing price. 4 of the founders have reduced part of their stake. They include Narayan Murthy and his family, Nandan Nilekani and his family, Dinesh and his family, and finally 4th, Shibulal, and has sold about 10% of his current holding. These founders have sold their stake for personal as well as philanthropic reasons. Deutsche Equities was the sole banker to the trade, and the shares were sold to both FIs as well as domestic institutional investors.
Thanks, Seema. Well, Deutsche Bank was behind the stake sale by Infosys founders. The head of the company's equities division, Sanjay Sharma, spoke to us after the stake sale. He said the response was good, and 80% of it was lapped up by foreign investors.
I think the deal was, very well done. It was done over the weekend, given the fact that Infosys trades both local and ADR, so we had very limited time. We launched it early morning and closed it before market today. Very good response from both domestic and international investors. Even though domestic investors did not have much time, they came in substantially. So broadly speaking, about 80% foreign and 20% domestic demand.
How many times was the book oversubscribed?
Again, I can't comment on it, but
a couple of times?
Reasonably oversubscribed.
So if it was reasonably oversubscribed, why did you feel compelled to sell it at a fairly big discount to market price?
4% for such a large trade is not a big discount.
Right, that's the details of the Infosys deal. The divestment drive for the fiscal is finally underway, and after sale, all eyes are now on heavyweights like ONGC and Coal India. Speaking to CNBC TV18'S Shireen Bhan, Coal and Power Minister Piyush Goyal said Coal India divestment will not happen this month.
Coal India itself has very, very detailed plans for the ramp-up of its production going up to 1 billion tons by 2019. We have very credible plans which have been worked upon with great sincerity, and credible plans which will be unfolded in the next few days. Then that once our plans are unveiled, the market also will recognize our efforts, will see through our sincerity of taking this to 1 billion tons. And this is December. Usually no issue opens up in December. It's that period of the year where the world is kind of on a break, a sabbatical. I'm sure in the new year you'll hear active movement on the disinvestment. There's absolutely no effort to put it on the back burner.
Well, on to a CNBC TV18 exclusive then. Jim O'Neill, former chairman of Goldman Sachs, believes that India should be all set for an interest rate cut in first quarter next year. Let's listen in.
I think you're certainly be getting a rate cut. It's sometime in the first quarter, or at least one. And as inflation drops more, and here's the key part why I'm not certain. If you also had the Indian rupee continuing to strengthen against the background of big capital inflows, I could see that in itself resulting in additional interest rate cuts, because in order for India to be competitive and boost industrial production, and particularly for manufacturing, it doesn't really want to have too strong appreciation of the rupee. I continue, as I have been now for a good 6 to 9 months, be pretty optimistic about the Indian economic cycle. And I would guess by the middle of next year, people are going to be talking 6% or higher rather than 5 or lower. Because you've got a lot of positive things in terms of leading indicators happening at the same time. Financial conditions for India are extremely stimulative. So it's a fantastic environment for investments. I can't imagine anything other than a notable acceleration of Indian growth next year.
Now, isn't that optimistic? A notable acceleration of Indian growth next year coming from that well-known economist. Time for a break on that note, but coming up, a technical chat with Sudarshan Sukhani. We'll also get you some F&O picks.
The F&O segment also sees a little change.
I mean, I can understand if I asked a complicated weekly chart, itna time lagta hai. I thought, okay, next time I'll say weekly chart and wait.
Commodity prices indeed are coming down, but we did not see a concomitant increase in local commodity prices in line with international commodity prices. So, for instance,
what do you expect the bond markets to do tomorrow itself, and what is the trajectory for the next couple of weeks? Minus 0.6 in December, and sorry. मैं थोड़ा घबरा गई जब आपने पूछा. Today we should have done a WhatsApp with Sanjay though.